I want to talk about something that quietly ruins more traders than a bad strategy ever will. It's not your entries, it's not the markets, and it's not your system. It's your position size. For a long time, I believe what almost every trader believes. If you want to make more money in the markets, then you need to trade bigger. Because surely a bigger size equals more risk, which equals bigger wins. And because of this, honestly, smaller trades felt pointless to me. I felt like I was wasting my time when I was taking them. I thought if I actually have faith in my strategy and I've backtested my data, then surely I should be pushing harder on this. And honestly, I couldn't have been further from the truth. That way of thinking nearly ruined my trading for me before I'd even really got into making good profits. Because the truth that most people don't realize is position size doesn't just affect your profits, it actually massively affects your psychology no matter who you are. It changes how you think, how you react, and how you behave under pressure because of the increased amount of capital. And once your lot sizes start to get too big, then your ability to think clearly starts to go with it. When I started to trade extremely large, I wasn't even trading the markets anymore. I was just trading my account balance instead. Every tick felt like it had to work, every trade felt like it needed to go in my direction, otherwise it was personal against me, and it wasn't just a loss in the statistic of my strategy. I remember seeing A plus setups where everything lined up, structure, confirmation, you name it, it was there, it was perfect. But I started to feel this building pressure that literally stopped me from taking the trades because of the amount of capital that I would be risking. I'd be getting my heart rate up, constantly telling myself this needs to work, this has to come through because it's such a big impact. And it's not because the setup was better and it stacked more in line with my confluences on my specific strategy. It's just because emotionally I wasn't prepared to lose that level of money. And that's the exact line that's drawn where trading stops being about probabilities and starts being about a mental battle. And you've got to remember that the market is a probability game, and your brain isn't designed to stay calm when there's that much pressure or that much capital on the line. When your risk on the table is too high, then your nervous system is naturally going to go into protection mode, and you're going to stop thinking clearly and make irrational decisions because you're going off emotions. You swap from looking at the charts mechanically to just hoping that you're right on the trade, hoping that it doesn't hit your stop loss. If you do go into stop loss, hoping that it comes back into profit just so you can get out at break even quickly. And hope is genuinely one of the worst mindsets you can have in trading. That's when trading starts to become gambling, and that's when you're not looking at probabilities anymore. When your lot size is too big, everything gets distorted. You start to hesitate on good trades. You start to move your stops way too early. You start to take more break evens or less profits than you know your strategy can take for you. And most people are going to call this a discipline issue. They think they need more willpower or a better mindset when it comes to trading. But it's genuinely not that complicated. Your lot size is just too big for your nervous system. Discipline isn't about just being strong minded, it's so heavily influenced by the amount of risk on the table. If what you're risking feels overwhelming, then discipline simply goes out the window. And that's just your brain's method of trying to protect you. See, the issue with this is that trading actually requires you to accept uncertainty. You all understand that losses are part of the job. But when your lot size is too large and there's too much risk on the line, losses start to feel less like part of the job and more like a threat to your personal self. And once it feels like that, you lose all objectivity. And that was one of the hardest things for me to personally admit in my trading. I had a strategy that worked, I had rules and I had experience, but for some reason my trades were just all over the place. It was up, down, stress, relief. There was no constant profitability, it was just everywhere. And I kept asking myself, what's actually wrong with my strategy? But the better question to ask here is, why does this all feel so intense? And that question changed everything for me. So I did something that absolutely dented my ego. I drastically decreased my lot size. A lot. To the point where it almost felt pointless for me to trade. Wins didn't really excite me, and losses didn't really bother me. It felt a bit dull, to be honest, like I wasn't really progressing. But then something shifted with that. For the first time ever, I could actually follow all of my rules easily without forcing it. I could let trades play out properly, I could just take a loss and move on. There was no drama, no overreaction, no emotional stress. I could start to think clearly from one trade to the next, and nothing actually changed about the market. I had. And this is the part that most traders miss. Trading smaller can actually grow your account faster because smaller size is what creates consistency, and consistency compounds over time. Big sizes create big swings, and those big swings completely ruin compounding. You don't build a trading career off of one massive win. You build it through hundreds of average, well executed trades. When your size is small enough that no single trade matters too much emotionally, you get something incredible with that: freedom. The freedom to execute properly, the freedom to think in probabilities, and the freedom to stay consistent. Professional traders aren't fearless, they just manage a risk in a way that keeps their emotions in check. Trading small isn't weakness, it's just control over yourself and your account. Most traders don't blow up because the strategy doesn't work. They blow up because their risk is too much for them to handle psychologically. And once I accepted that, everything changed. I stopped trying to feel confident or in control. I stopped trying to prove myself. Instead, I aim to feel neutral because that's exactly where consistency lives. The goal isn't to feel excited or overconfident. It's to stay emotionally steady. To treat each trade as just one in a long series. Because when you trade too big, every trade feels like a verdict on you. And when you trade smaller, it's just information. A win or a loss are both just feedback to you. And that's exactly why most professionals think differently. Most beginners will ask, how much can I make today? And most professionals will say, how can I make sure I'm still trading next year? Think about what I've just said. And that shift in mindset changes everything for you as a trader. When your focus becomes survival, the desperation disappears entirely. And desperation is behind most of the bad decisions made in trading. Trying to make money quickly usually leads to losing it quickly. But protecting your ability to trade, that's what allows things to grow over a longer period of time. The market doesn't reward intensity, it rewards patience. And patience only works when your risk is under control. Once your lot size is small enough that losses become manageable and wins don't send you over the top, that's when consistency starts to appear. And once that happens, compounding quietly does its job in the background. This is exactly how real progress is made. I had to let go of the idea that success in trading comes from being bold. And social media doesn't help, because all you see is big wins and huge numbers and it skews your expectations. But that's not reality. Real success comes from repetition, patience, and protecting your mental capital just as much as your money. Don't get me wrong, it's not flashy and it's not exciting, but it works. Trading smaller isn't about making less. It's about staying in the game long enough for your edge to actually play out. The trader who focuses on survival will always outperform the one that's chasing the big wins. And once I properly understood that, everything changed for me. Not my strategy, not the market, my relationship with risk. Trading stopped feeling like a fight. It became a process, something that I could repeat calmly day to day with no issues. And that's exactly when consistency finally showed up for me. Not from big wins, not from hype, just from being able to show up and do the same thing properly again and again. So if you take one thing from this video, then let it be this. The market will always be uncertain, but your risk doesn't have to be. Get that right, and everything else has a chance to fall into place. Trade smaller than you think you need to. At this point, I'm hoping that you've understood that it's most likely your lot size and not your strategy that's holding you back. And a simple way to check this on every trade is to ask yourself this. If I took this exact trade, but risked 10 times less, would I still manage it in the exact same way that I'm choosing to now? For most people, the answer to this question is no. You would let it play out, you would not panic, and you would not interfere with the trade because you know it will work due to your strategy. And that piece of information right there tells you everything that you need to know. Because your strategy didn't change. The setup didn't change. The only thing that changed there was your emotional pressure in this trade. And this is the part that most traders overlook, because a lot of people are looking for the perfect strategy, when in reality, yours is probably a good strategy already. It's just being ruined by how much you might be risking. So before you go away looking for something new, I suggest that you ask yourself, have I actually given my strategy an opportunity to prove itself? Am I giving it a fair chance to work? Have I done enough non-emotion backtesting through paper trading to know that this is a good or bad strategy? Because if your emotions are interfering with every single trade, then the answer is most likely no. And that's actually good news, because it means the fix isn't learning something completely new. It means the fix is internal, within you, and you can do that now. And look, if this is something you are struggling with, then don't worry, you are definitely not the only one. I have been there myself, and I'm sure multiple other people have been in that place as well. This is the exact sort of thing that we talk about every day within our free community. We share trades, different perspectives, and always talk about challenges like this that people face every day in trading. Because this is the side that doesn't get spoken about enough. You only see big numbers and flashy charts. You don't see the psychological battles that people have to go through on a day-to-day basis and how to actually solve them. If you want to be around other traders who are working through the same things, then the link is in the description and it's completely free to join. And if you're in a position where you feel you need more direct help, then there is a link within that community to book a one-on-one direct call with myself. We can go through your situation properly to figure out exactly where you're at and create a roadmap for you to get from where you are now to exactly where you want to be in trading. If either of these things sound like something you're interested in, then make sure to click that link in the description. That's all for this video. I hope you guys enjoyed, and I'll catch you in a bit.